Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Boyajian, currency analyst, and today is Monday, October the 16th. Today we will look at the dollar yen, the euro dollar, the pound dollar, and the euro yen pairs. Let's start first with dollar yen. We can see that that short rally we had from the 10 months low of 107.31 from early September to that near 3 month high of 113.43 appears to have come to a bit of a pause. We can see the short-term bias is to the downside. The stochastics are trending downwards and have now approached oversold levels. Looking at the RSI is giving a neutral picture, and that pretty much describes the medium-term outlook for the pair. We can see the 50-day moving average is more or less fluctuating around a central flat line, painting a neutral picture there. But we did see a strong upside momentum. We can see the 20-day moving average rising sharply upwards following that rally from 107.31 to 113.43. But prices, we can see, despite several attempts, prices didn't manage to close above the 113 handle. They would need to close above that level in order to indicate a strengthening of that upside momentum. We can see the resistance coming at the 78.6% Fibonacci level of the down leg from 114.49 to 107.31. At the moment, though, we are seeing strong support coming from the 61.8% Fibonacci at around the 111.75 level. Further downside would see support coming from the 50% Fibonacci at 110.90, followed by the 38.2% at the 110 level. Let's move on to euro dollar now. We can see that euro dollar is looking slightly bearish in the short term. We can see the stochastics there did reach overbought levels, and that's why we saw euro dollar retreating downwards again. RSI is just below the 50 level. In the medium term, the picture is a bit more neutral. We can see that double top being formed, which was confirmed after prices broke below the neckline of 1.1822, and they've now formed a bottom at the 161.8% Fibonacci level of the up leg from 1.1822 to 1.2092. If we see further downside, we could potentially see another bottom being formed at 1.1385. For now, though, we are seeing support coming from the 23.6% Fibonacci level of the down leg from 1.2092 to 1.1669, and resistance is coming from around the 50-day moving average and also the 50% Fibonacci level of that down leg from 1.2092 to 1.1669 at around the 1.1880 level. If prices manage to break above the 50% Fibonacci level, we should see resistance coming at 1.1930, which is the 61.8% Fibonacci, followed by the 1.20 handle, which is the 78.6% Fibonacci level. Let's move on to pound dollar now, because the pound is looking fairly bullish at the moment. RSI has been rising and is now above the 50 level, having dipped below it earlier in the month. The MACD has also turned positive again, although it hasn't yet managed to cross back above its signal line. In the medium term, the outlook is looking a bit more neutral, so it's a neutral to bullish outlook in the medium term. We can see that at the moment resistance is coming from the 50% Fibonacci level of the down leg from 1.3656 to 1.3026. Above that we have the 61.8% Fibonacci at 1.3415, followed by the 78.6% Fibonacci at 1.3520. To the downside, we are seeing intraday support coming from the 38.2% Fibonacci at 1.3265. If we do see today's downside momentum gathering pace, we could potentially see support coming at the 23.8% Fibonacci at 1.3175, whereas a break below 1.3026 could open the way to the August low of 1.2773. And finally, the Euro-Yen. Euro-Yen is looking fairly bearish in the short term. We can see the stochastics, the percentage D line sharply below the percentage K line. Prices had peaked at 134.40 back in August, and that was the 78.6% Fibonacci retracement of the down leg from the June 2015 high of 141 to the June 2016 low of 109. So we are seeing that year-long move being retraced up to 78.6%. And if prices continue to go up, which they could, because the medium term the outlook is looking still rather bullish, although we are seeing an increasing downside risk, it's still managing to hold on to that bullish structure in the medium term. We could see potentially resistance coming from the 137 handle and the 138.80 levels before reaching the 141 handle, which was the June 2015 high. But at the moment, we could see if the downside momentum continues, we could potentially see support coming from the 50-day moving average at 131.15. Below that, we have the 61.8% Fibonacci at 128.95, followed by the 125.20 level, and that's the 50% Fibonacci level of that down leg. That's it from me. Thank you very much for watching, and have a great day.